What's going on, Investomaniacs? Knight Rider here, and today we're taking a look at Twitter's most recent quarterly report, the Q1 2019. Analysts were expecting 15 cents earnings per share on a GAAP basis. Those are the real earnings. The whisper number was 20 cents per share, and Twitter was like, nah, we'll raise you up to 25 cents earnings per share on a GAAP basis. That is a 67% earnings beat, people. That's how you have a good quarter. Revenue was expected to come in at $774 million. Twitter beat on that as well with $787 million, or a 1.7% beat, so a decent little beat there. The stock shot up about 16% the day it reported, and as you can see, the next couple days it's trading roughly sideways. Let's take a look. Monetizable daily active users. This is a new metric for Twitter, and they're phasing out their daily active users in favor of the monetizable active users. I believe this is directly to combat or push against Snapchat. Snapchat has a much smaller market cap, about 1/2 the size, and yet has more users than Twitter. And I think a lot of investors will say, hey, I can get more users for half the price. I should go with Snapchat. So Twitter's combating that by saying, hey, you guys may have more users, but we have more monetizable users. Why is this? Most people who use Twitter are going to see ads on Twitter. However, that's not the case for Snapchat. A lot of people use Snapchat in a way which is very difficult for them to monetize, meaning what? How do a lot of people use Snapchat? They use the camera function, the camera app, right? They take their snaps and whatnot, where there's little to no monetization going on. Yeah, they have the kind of advertised filter sometimes, but that's a very small amount of monetization. And then users also use it for the chat, right? To chat with their friends and send snaps to their friends and whatnot. And again, there's little to no monetization happening there. So it is more difficult for Snapchat to monetize their users relative to Twitter. So I like the fact that they're breaking out monetizable daily active users instead of just daily active users. I think it's a good strategic decision. Monetizable daily active users are up to 134 million, or up 11% year over year, which you can see is the kind of growth that has been happening roughly the past year or two. Q1 was a solid start to the year, with revenue up 18% year over year, reflecting particular strength in the US. In Q1, revenue outperformance in combination with lower expenses resulted in better than expected profitability, with GAAP operating income of $94 million and GAAP operating margin of 12%. We are taking an even more proactive approach to reducing abuse on Twitter and its effects in 2019. Improvements in Q1 emphasize proactive detection of rule violations and physical or off-platform safety, including making it easier to report tweets that share personal information, helping us remove 2.5 times more of this type of content. We all know over the past couple of years that the Twitter bots and spammers and hecklers have been a real problem, and people just reopening more and more accounts, and Twitter has had a hard time getting these people off the platform. They're doing a better job now. It is decreasing the amount of users that they have, and some people are seeing their amount of followers go down, but this is very healthy for the overall platform and will give a more positive user experience going forward. So I think it's a very positive thing. And hopefully they'll continue to get a better grip on it. Again, total revenue going from 665 to 787 year over year, GAAP operating income going from 75 million to 94 year over year, and monetizable daily active users going from 126 to 134 million year over year. Expenses. So remember, revenue grew at 18% year over year. Total operating expenses, including cost of revenue, also grew at 18% to 693 million. For a company at this point in their life cycle, I would wish that their operating expenses were not growing at the same rate of their revenue. So that's something I'm a little concerned about, but nonetheless, it is what it is. Their cost of revenue grew 18%, research and development grew 19%, sales and marketing grew 16%, and general and admin grew 17%. So is Twitter a buy? I'd say it is a buy. If this is a stock you want to be in, I'll go ahead and bless it. Having said that, it's not my favorite stock out there. It's not a buy. I'm jumping up and down about, but again, if you want to be in it, I'd say have fun. Hope you guys have a great day.